Let's understand the direction of the markets as we understand the nuances in the kind of split that we have between the Nifty stocks, the mid and small caps. PV Subramanyam is joining us in this discussion. He's the CEO of Subramani.com. Always good to see you on the show, Subra. Do tell us what you make of the breadth of the markets right now. How secular is the up move to you? Because we're touching life highs again. Do you think that this kind of up move is being supported by all elements in the market? Or like my colleagues were suggesting, that the Nifty stocks are moving up, not so much elements within the broader markets?
Uh, I just came out of the Janmashtami puja and I said, Murli, hamari mat bajao. We may need the support of Giridhar to hold us when we fall. so So yeah, I mean there is buoyancy all around. There is buying. There are smiles. 25,000, 80,000. All that looks good. The SIP markets are doing well. The money is coming in. So I don't see any reason why any particular. See, mid cap, large cap, small cap. What is also happening is everybody has a large cap fund, multi cap fund, and a flexi cap fund, and small cap fund and mid cap fund. So the question is, where is the money coming and where is the buying happening? So with this, very little to say which cap will do well. Whether the market itself will do well. Actually, the question which many people are asking is it time to stop my SIP and start afresh after some time? Will the market fall? We don't have any answer. And Vikram, you know this, that if the market goes on to 85,000 or 90,000, this 80,000 will be forgotten. Or this 25,000 will be forgotten if the Nifty goes to 27, 28, right? Every number looks like a milestone, but it is exactly that. It is a milestone. The market just does not look at it. And none of us are pure Nifty or Sensex investors. So I don't think we should worry. Yes, if you have good profits coming in and you need the money for something, take it out. Otherwise, I don't see any reason to take any particular action now. But yes, if you have got some metals and you think 82% return in 1 year or 70% return in 1 year is not going to sustain, which is not going to, selling a little and booking your profits makes sense. Like even when the market today hit 25,000, I was selling something and I was also buying something. So I don't think your activity should change because the market it's a new high, because there's nothing called the market. What is your portfolio doing? That is the question you have to answer.
There's no taking away from the importance of buying into opportunities, and they always exist in the markets, no matter what factors are at play and whether it's going to have an impact on one sector, not another, is definitely something that plays out not so much in the long term. Yes, in the short term, but how much are these rising tensions bothering you in West Asia that impact the price of oil? How much of a threat is that to Indian equities as you see it right now for investors who are not thinking as long term as what you're suggesting?
See, the problem is we seem to have conquered the oil thing by doing nice pacts with Russia. We are buying from Russia and selling to Europe. So that I don't think oil is so much of a problem. But you look outside the country, there is a problem everywhere. Pakistan is not in great shape. Bangladesh is not in great shape. West Asia, Ukraine. I mean, just before this, you said that there was bombing all around. So
Yeah.
is there a problem? Yes. Will the world economy grow at a great pace? No. Is there enough geopolitical worries for every country, not just India? Answer is yes. But is the market going down? No, it's not really going down. Is the market is not even steady. So whatever money you need in the next 2, 3 years, please shift to cash. Other money, just let it be there. It's very difficult to say what will happen. And the problem is today, if I tell you it's a great time to be selling, and the market then goes to 27,000 and then goes down to 22,000, people are going to say, yeah, you were right, but you could have told me at 27,000, as though people are going to get it right. You will never get it so perfectly right. So some of the shares which you have bought, which have done well, thoda profit book kar lo, it's not so bad. There are very attractive offers in the gilt market. I've been getting 13% return in my gilt. Why do I even have to go to equity? There are fantastic deals happening in the gilt market where there is no other risk. Interest rates have been moving south, and I expect it to move further south. You're going to make enough money in debt. Why would you want to take so much of risk in the equity market? Equity market returns are good, but the risks are increasing.
Risks are increasing, so you're actually suggesting that stay away from equities. If you have money to invest, to park, you wouldn't look at equities right now. Is that your takeaway?
I would continue my SIP. But
Okay.
I wouldn't want to, put lump sum into equity. In fact, if you are invested in, say, many metals, or you have invested in many energy stocks, take some of that money out and put it into an energy fund, because the fund manager might do a better job at this time than you could do. You don't have an Indian oil available at 70, or Coal India available at 112 or 115. Those prices are gone. Everything is now very well priced. Go to a fund manager rather than try to pick up your own stocks. In fact, if you picked your own stocks, book a little bit of profit up to 1.25 lakhs or 2 lakhs or 3 lakhs, and put that money into some of these energy funds or metal funds or things like that. That way you're reducing your risk. I'm not saying you're improving your returns, but you're reducing your risk. Vikram, the other side of return is risk. Pay attention to risk, return will follow. If you chase returns, risk will follow.
Very valid points. But now, if you try and understand what foreign investors are doing, and sometimes you do take your cues from there, something that we decode on the show too, we are seeing the dollar index, the bond yields dipping, both of them going down. So we've seen foreign institutional investors, these FIs, buying into Indian equities. And on Friday, the data from the exchange showed that was about 2,000 crore rupees, just shy of that. So now, with hopes of those Fed rate cuts coming through in September, how do you think foreign investors are going to park their investments in Indian equities? Do you see some cues for us there?
I see, but look at it, look at their expectation. They're not expecting 20% return. Our investors have got 20% return. They're expecting they'll get 20% year on year. That's not going to happen. Their returns are far less. I mean, their expectations are far less than what our investors are expecting. So they may be happy, but you may not be as happy, because because they have invested. Their return expectations are lower than ours. So you have to be careful about that.
What the various parts of the market are doing. We will be taking some of those cues. There are these factors, the risk that you point out. You're saying gilts are looking that much more attractive right now. So why take more risk when there is so much volatility, when there are so many risk factors in the markets? I hope you are able to take care of your cough. Subra, do take care. Thanks very much for joining us. Enjoy the rest of the Janmashtami celebrations. We hope the Lord plays that Murli for everyone, and our investments rise in value over a period of time. Thanks indeed.